But despite that, we think that you could still see a push in earnings expansion. And that's obviously going to be fueled by everything below that, right? Like how big impact are there on tariffs? How many interest rate cuts do we get or don't get? What kind of deregulation boost GDP? And obviously what happens with government spending impacts interest rates, impacts the risk-free rate of return, and can make all of these things either copacetic or not. So let's kind of talk about earnings growth. So for 2025, we're estimating somewhere between $285 and $290 per share of S&P 500 earnings. So talk to me how you get to that 6,800 to 7,200 and what that means as far as like an expected total return.
Yeah, that's as far as how we got to that 285 to 290. I know that's a little bit aggressive, but we really are relying heavily on that kind of an elevated forward multiple that we think can sustain throughout the year. We think there'll be some exuberance in the market with the new administration. We also see some things that could come online that can help basically even out some of the threats for the tariffs.
Yeah.
The Treasury General account is available for them to draw down. We think quantitative tightening may actually come to an end this year. At least that's another thing in the books that they could use to create more liquidity. So that's part of it. Christian, what do you think as far as on the earnings side of it?
Yeah, so kind of like you were saying, right, the liquidity factor is going to be like very important this year. Kind of with the new Treasury Secretary, Scott Bessent coming in. We don't really expect much changes from what current administration is doing as regards to bill and bond ratio, right? So that continues to remain that liquidity, at least to that aspect, the same. And then just for the earnings growth, right? We kind of touched a bit about the deregulation and other policies that the administration can push forward that will potentially drive these earnings growth and throughout the year.
Yeah. I think you guys all hit it on the head there. It's going to be dependent upon a multitude of factors. It's really going to, we were talking about the dollar this morning. Luke loves the phrase, the dollar wrecking ball. The dollar is continuing to march higher. That's going to put pressure on multinational corporations. I think we addressed that this morning in our meeting. But yeah, this is pretty lofty as far as, multiple expansion. That puts us at 24-25 times forward earnings. But if the economy is growing, you may see valuations expand. But this is kind of what we're expecting, a pretty decent year in earnings growth, somewhere in the range of 14 to 16%. What did we get as far as earnings growth this year?